The Iran-Israel flare-up may be shocking the world for now, but a far more sustained impact on the global economy will be the stimulus Blitz announced by China's government and central bank recently. The PBoC, the People's Bank of China, announced a 20 basis point repo rate cut, but more importantly, a 50 basis point cut in reserve requirements. Now, this 50 basis of RRR cut basically gives the banks more cash, which the government intends will be used to buy government bonds. And the government is going to issue a lot more bonds. 2 trillion yuan of special sovereign bonds. This cash raised will partly be given to families who have more than one child and partly to local governments to lighten their debt and help them stimulate their economies. So is this time different? Will this stimulus work and trigger a faster growth, pull China out of its, 4-year slowdown? What are the implications for the world suffering from an onslaught of cheap products from China? I have with me economists from the 3 top global rating agencies. I have Kuijs from S&P Global Ratings, Harry Murphy-Cruz from Moody's, and Jeremy Zook from Fitch Ratings. Gentlemen, thank you very much for joining me. Thank you so much for your time. Louis, if I may start with you, the China stimulus this time seems to be encouraging consumption. Are you on the verge of increasing your GDP forecast for the country? Do you think this one works?
Well, good question, Latha. We actually just published an outlook the morning before some of the announcements by the PBoC and other regulators came out. We are a little hesitant to make a big change to the outlook for the simple reason that, yes, we've had some monetary easing. Unfortunately, at the moment, monetary easing probably won't make a big dent in the economy. We're waiting for the fiscal side. And there are rumors that that is going to come, but we haven't had an announcement. So for now, we are, encouraged by what's happening. We see the authorities care about growth, which is a good sign. We are reluctant to already start to change our growth outlook.
No, I agree with you. What even I was speaking about distributing money to families seems to be sourced information. But if that indeed were to come, Louis, if we were to see, income transfers to families, as well as, some trade-ins for those who want to, those who are stuck with houses, do you think that will make you change your mind?
Well, I think, a meaningful fiscal easing, and hopefully also with some of those measures, that will make people feel more comfortable about spending, people feel more comfortable about, their access to health and education so that they will reduce their saving rate. Yeah, I think these kind of measures would really help improve confidence and probably shore up growth.
Well, let me come to you, Harry. What's your sense? 2 questions, actually. Will this help China? I mean, will it propel it to even 20 basis, 30 basis faster rate of growth? And more importantly, will that mean that China will stop being such a disinflationary force? Will it consume more steel and iron and thereby push up global prices a bit?
Well, what we're most encouraged by is exactly what you're talking about, with a focus on the consumption side of the economy. If we look at stimulus in the past, so often it's looked at infrastructure, it's looked at big building, it's looked to kind of manufacture growth in tough times, whereas the reports that we're seeing on the fiscal side of the stimulus this time is very much trying to address the problems that are in China's economy. And at the heart of that is a household sector that isn't confident enough to spend. It's not confident in the future of the economy. And so righting that is going to be incredibly important. I think the supports that we saw last week, and certainly, the official announcements are what we're going to need to see before we really pull the trigger and start lifting our growth expectations. But from what we've seen, if we do see that fully implemented and implemented in the right ways of targeting household consumption and trying to, boost that consumer confidence, then we expect it to add around 0.2 percentage points to growth this year. So for us, that would push it to that around 5% growth target that officials have set. But also, given that this spending is coming so late in the piece, and also that really I think it's a flag that there's more supports to come, well, that suggests that next year is probably going to look a little bit better as well.
Okay, well, same question to you, Jeremy. Would you agree that at least the outlook looks like China's on the right path, or are you still not convinced?
Well, I think with the latest announcements that we saw last week, we are seeing maybe a bit more of an effort to coordinate monetary and fiscal policy. And so this is quite an important signal, I think, in the authorities' willingness to try to tackle some of these issues when it comes to flagging domestic demand in the Chinese economy. Now, I think, the monetary measures that we saw last week, the big announcements there, again, we think those only have a relatively modest impact on the growth outlook. When it comes to demand for credit, it's really about the demand side rather than the price of credit. And so monetary policy at this point is somewhat limited in its scope. So the fiscal announcements that we have yet to see, I think, will be, very important for our expectations of where growth will go this year and next. Already this year we've seen fiscal support running below our, the expectations that came out of the budget in March. So we'll also have to assess, whether the new fiscal stimulus is kind of filling in that potential gap. Or if this is kind of new fiscal stimulus, and again, how this is targeted, if it is targeted.
Okay. So basically, Jeremy, you're not convinced both about the quantity of stimulus and also you're not convinced whether it is for income transfers and consumption. You would wait to see. Is that your thesis, much like Lewis?
Yeah, I think we have to wait on the details of the fiscal stimulus because that is what will be most important.
Fair point. Lewis, the bigger problem that the world is grappling with China, I mean, before I come to the internals of China, is this huge disinflation that China is engendering. Because until now, they were, as all of you have said, they've been investing more in investment, in production. And since there's not enough people inside China consuming them, they've dumped it on the world. You have Indian steel companies complaining that the steel from China is $50 lower than their own production cost. Do you think this disinflation will somewhat recede because the government appears this time not to be concentrating on production?
Yeah, I think there are, of course, China exports a lot of things to a lot of countries, right? And I think there is a structural issue, and that is that, I'm sorry to say, the Chinese manufacturing sector is very competitive. And so they're able to crank out stuff at pretty low prices. Now, of course, that has been amplified by cyclical problems, cyclical issues, and the real estate downturn is the biggest one of them, of course. So if the Chinese government is able to turn the local housing market around, that would really change the dynamics on the steel market, its own steel market, and that would dampen a bit that pressure that you have from those steel companies. But I think the competitiveness of Chinese products globally won't go away, even when we have a pretty meaningful resumption of growth in China. Okay.
Your thoughts, Harry? Do you expect that disinflation is going to remain as bad? Solar panels, EVs, steel, furniture, toys, will they continue to face anti-dumping duties from across the world?
That's certainly the global trend at the moment. We've seen that in the US, we've seen that through EU, we've seen that most recently in Canada and also parts of Latin America as it relates to steel. Now, those price pressures are, they're not going away. As has been said, China has very competitive domestic markets. They have invested heavily over a long period of time for those efficiencies, and there have been some subsidies that obviously have helped there as well. The better growth outlook doesn't necessarily change that for China. Yes, some of that would be absorbed, and a turnaround in the property market would certainly add to the demand for steel, which would help with prices globally. But I think that broader question as to where is the world headed with tariffs on China, if we look towards November, certainly there is a risk that things only become far greater with global tariffs than the opposite would be true.
Okay. Oh, yes, the November question I'll come to in a bit after the commercial break. But before the break, I want to get two of these big global developments out of the way. Lewis, would you worry that the Red Sea flare-up can have a debilitating impact on global growth, at least in the near term, at least in 2024?
You know, Latha, anytime we have issues in the Middle East, we see the oil prices responding, right? And we all depend on oil. So if the oil market were to really, end up with 10, 15, 20% higher oil prices, then definitely that will increase inflation in all our economies, and that will make it harder for all our central banks to continue easing their monetary policy. This is not only true for India, it's also true for the developed economies. And so this is clearly something that we all need to watch.
No, but, let me make the question stand on its head, Louis. We've had so many central banks cutting rates, a stimulus in China, a higher than expected rate cut by the Fed, fairly strong growth in India, rate cuts in Europe as well. And the Red Sea flare-up has been there. It's just gotten accentuated a little bit more. It's not that Iran is new to the war. In spite of all this, crude is just $73. It's far away from those 80s and 90s that we saw even as recently as April. So do you think it can really rock global growth? Should a central bank like India be really so scared? $73 is something we have seen, and we have seen 25% more than that.
Yeah, I think your point is very fair, that we are entering this situation with an oil market that is pretty benign, right? And we've actually, if we also need to look at why are these prices, why have they been pretty benign? Oil market experts have scaled down their forecasts for growth, global growth of the demand for oil. That, of course, by itself is not necessarily a good sign for the global economy. But yeah, that's a fairly benign market. But of course, if you look, for instance, at the RBI, they have been basing we are all basing our expectations of the RBI starting to cut later this year on a fairly benign oil market. And if that were to, if that picture were to change, we might have to revisit some of those timetables.
Oh, yes, they are meeting on October 9th to give us their policy, and they have a very, very good excuse not to even sound dovish. Just a very quick question on the US port strike as well. Harry, what's the reading from Moody's? I saw your press release. You think that this can jeopardize and pull down growth for now?
It all depends on how long this lasts for. So the most likely situation is that the strikes last for a week or 2 weeks. If that's the case, well, we don't expect there to be any significant macro implications beyond key areas where, the port is a key economic lifeline for those areas in the US. So places like Savannah is a good example. It's when we start to see the strikes extend 2, 3, 4, 5 weeks longer that we start to see bigger impacts where, on both sides, in the US and globally. In the US, it's shortages develop. That pushes up prices for things in the US. On the other side, for particularly Asian exporters, well, if you've got things that can't get off ships, that's more costly, as well as the fact that people are simply not going to be buying if the wait time to get into the US is so long. So it really depends on the time frame that these strikes continue on for. As I say, we think it's going to be shorter rather than longer.
Okay, well, as we speak, we don't know the end date. But apologies for this minor digression. I want to come back to the big China question and, to what extent, what more are you all expecting from that economy, the impact on the global economy, all those questions in a minute after the break. Bazaar viewers, you will get to view the whole show after market hours. For the moment, after Bazaar, it will be Chartbusters.